You're stuck in traffic. Your phone buzzes. Your Uber is 12 minutes away. Now imagine a different notification. Your air taxi is on the rooftop in 4 minutes. No traffic, no road, straight line, city to city, door to door. That's not science fiction. That's what Archer Aviation is trying to build. The question, as always for small cap stocks, is whether the business makes sense. This is Ticker Talk. One stock, 5 minutes. No jargon. What they do. Archer Aviation makes electric vertical takeoff and landing aircraft. eVTOL for short. Think helicopter but electric, quieter, cheaper to operate and designed for short urban hops. Their aircraft is called Midnight. It carries 1 pilot and 4 passengers, travels up to 100 miles on a single charge, and reaches 150 miles per hour. The pitch? Replace a congested city commute with a 10-minute air taxi at a price closer to a premium Uber than a private helicopter. It sounds like a pitch deck, except Archer has $2 billion in cash, a manufacturing partnership with Stellantis, backing from United Airlines and Boeing, and something most competitors don't. 100% FAA acceptance of Midnight's means of compliance. First eVTOL company in the world to hit that milestone. The numbers: Archer generated $0.3 million in revenue in full year 2025 against an operating loss of $729 million. This is a pre-revenue company. You're not buying a business, you're buying a bet on a technology that doesn't yet have regulatory approval to fly commercially in the US. What you do have is a $6 billion order backlog. United Airlines, the US Air Force, Abu Dhabi Aviation, Ethiopian Airlines. Real organizations, real commitments. The company ended 2025 with $2 billion in cash. The runway exists. Whether it's enough is the question. The bull case. The flying taxi market is not hypothetical, it's a regulatory timeline. Archer has been selected as the official air taxi provider for the 2028 LA Olympics, backed by White House executive orders promoting American eVTOL leadership. That's a fixed date, a fixed location, and federal support. The FAA milestone matters enormously. Being first to achieve 100% means of compliance acceptance is not a press release. It's a concrete step in a rigorous process that directly determines when Archer can fly commercially. Analysts see over 155% average upside from current levels, with the street high target at $18. The first revenue is imminent. UAE flights are targeted for the first half of 2026. That's the moment the story shifts from eVTOL startup to company with commercial operations. In markets like this, the shift from zero revenue to any revenue is often when institutional money starts to move. And then there's the defense angle. The Pentagon has requested $13.4 billion for autonomous military systems, and Archer already has a dual-use hybrid aircraft program in development. The overlap between civilian and military use cases gives Archer a revenue backstop most eVTOL companies don't have. The bear case. This company has been overpromising and under-delivering since it went public via SPAC in 2021. It originally projected revenue of $42 million in 2024 and $3.4 billion in 2027. In reality, it generated no meaningful revenue in 2024 and is expected to generate around $32 to $62 million in 2026. That's a miss of extraordinary proportions. The FAA timeline is the single biggest risk, and it remains genuinely unclear. Archer still needs to complete compliance and flight tests for type certification, and its production certification remains in progress. Some analysts don't expect full type certification until 2028. Every month of delay costs real money against a fixed cash runway. The stock is down 63% from its 52-week high of $14.62. And Cathie Wood has been selling into the drop. Insider sales are rising. The beta is 3.84, meaning this stock swings nearly 4 times as hard as the market. It is not a stock for the risk-averse, and Joby Aviation, their main competitor, is fighting Archer in court over alleged supply chain advantages. This is a sector where the race to certification is winner takes most, and the finishing line is still years away. Here's where I land. This is the purest speculative bet on this show so far. The technology works, midnight flies. The question is whether the regulatory, manufacturing and commercial execution can come together before the cash runs out and the backlog evaporates. The 2028 LA Olympics is the moment of truth. If Archer is carrying passengers over LA in 2 years, this stock looks cheap at $5. If they miss, the story gets very hard to defend. This is the episode where I don't have a clean verdict. It's a binary bet. You either believe in the future of urban air mobility and Archer's ability to get there first, or you don't. Not financial advice. Do your own research. One stock, 5 minutes. No jargon. See you next week.